Welcome back to Go Gaddis Real Estate Radio. In this segment, one of the most misunderstood topics in home ownership is mortgage insurance. People say, well, I know what homeowners insurance is, but what is mortgage insurance? We're going to talk about when you have to keep it, when you can remove it, and how some homeowners are getting rid of it way before other people thought they could. You're listening to Go Gaddis Real Estate Radio. I'm Cleve Gaddis. I want to remind you that I'm here to make real estate clear and simple and worry-free. I've been a real estate agent and broker and team leader in Metro Atlanta for 25 years. We live, eat, breathe, and sleep real estate. Regardless of who you are or where you are in Metro Atlanta, if you need some service, I invite you to consider using Modern Traditions Realty Group. You can go to gogaddisradio.com, click on Contact Us, and submit some information, or you can just call us the old-fashioned way at 770-497-0000. For those of you who were tuned in during the last segment, you know we've got Matt Scout, who is VP and Executive Mortgage Loan Originator for Southeast Mortgage. He is our preferred mortgage provider, and he is our expert on today's session. We finished the last of the segment by me asking him if it was getting easier to get a mortgage, so about the same to get a mortgage as it was a few years ago, or harder. And Matt, your answer was?
It's getting easier.
And it's because of how AI is being used. And I would love to explore that just a little bit. What are some of the ways that AI is being used? I don't know. Do you use AI in your daily life? Like, do you use chat to help you write stuff and things like that?
Absolutely.
Okay. And I do too. And so I'm really curious as to how AI is helping in the mortgage industry, especially from an underwriting perspective.
You know, for the actual underwriters, the way the guidelines are written, there's a lot of opportunity for gray areas or interpretation of the guideline. So the AI kind of just gets straight to it, reads it for what it is, and is able to decipher exactly what is needed, no more, no less. So you're running into a lot less experiences of things last minute than it used to be.
And so literally you have an underwriter that's reviewing this package, you know, these 8, 10, 12 different pieces of information that the borrower needs to submit, bank statements and, you know, tax returns and you know, W-2s and pay stubs and stuff like that. I think I got pretty much the whole list for people who are employed.
That was good.
And so the AI is actually, so the underwriter's looking at all of it. The underwriter's making some decisions and doing some things, but AI is looking at all of that and comparing and saying, hey, for example, this person's income is coming from this line on the tax return, which it says it may or may not be able to be counted. And I want to give a specific example, if you don't mind. But I was looking at getting a new loan for a house in Dallas, and a lot of the income that I make every year is in the form of distributions. I get paid a salary, but I own a business, and we take the profits of the business and we distribute them. And a distribution cannot be counted as steady income by an underwriter.
That's correct.
So on the K-1, mine is classified as a distribution, but if it were classified, for example, as a dividend and it shows up every year, then it would be counted as income, as consistent income. So I would assume AI can help find those issues. Now, it turns out I was still okay from a qualification standpoint, thank goodness, knock on wood. But it surprised me because I would have thought that I had enough income to be exceptionally well qualified for that loan. And the loan originator in Dallas says, well, you can't count most of your income for this purpose. So is that the kind of stuff that AI catches?
Yes, we're usually able to find that anyway, but AI is able to do a lot of it. It's actually connected directly to Fannie and Freddie's website for income calculation. So they're going straight from the guideline and they're reading all of those documents.
So the AI is reading the documents and comparing to the guidelines all in real time. And I would assume it's probably all connected. So when they update their guidelines, then the AI's guidelines get updated as well.
That's correct. Yep. Directly from Fannie Mae, Freddie Mac, and Ginnie Mae.
And so how would you say that AI changes the borrower's experience? I'm thinking, based on what you said just a minute ago, that there's just way less last minute surprises, because in the mortgage business, there have been some doozy surprises that come up at the very, very last minute. In many cases, not really the lender's fault, something that was disclosed to them that turned out not to be the case or something like that. And I'm not even saying it's the borrower's fault, but is that what's being enhanced in terms of the borrower's experience, is just less surprises? Or what other ways does AI make it easier for a borrower?
Yeah, it's less surprises, and more than anything, we're having to request less from the borrower. If we're doing enough upfront, whether it's us gathering documents or AI is able to find a lot of what we need to satisfy the guidelines, then we're only having to ask the borrower for 3 or 4 things compared to 7 to 10 things. So it's just a better, more pleasant experience.
Interesting. And now, is the borrower ever interacting with AI, or they're just interacting with you?
They're interacting with us. Yeah, we use AI in the background, but it's not directly working with them, other than a few like small updates that come across their phone or email.
Got it. How are loan originators using AI in their marketing and sales? Is it being applied there anywhere?
I don't know if everyone is. I'm using it a lot for the emails that I do send out. So if I'm giving updates, I like to send out weekly updates to a few groups, and I use ChatGPT to start that off and help fact find things, and then I'll put everything together. So it just expedites everything.
Yep. How do you make sure that things stay in your voice? Because I know sometimes people send things to me and I'm like, I know this person did not write that. That is not the way they write. It's not the way they talk. How do you make sure that it sounds like, and I read some of your emails and they seem like you wrote them, every word. How do you make sure that they sound like you?
Because I am actually writing them. I might get the information from AI, from ChatGPT, but I'm just getting that information and I'm rewriting it. So it speeds up the fact-finding portion for me, but I want to make sure it doesn't sound like someone else or something else wrote it.
Got it. That makes sense. Now, if somebody wants to reach you, Matt, how would they do that? If you want to talk about refinancing or about the possibility of getting a purchase mortgage to buy a new home or whatever that is, or you just want to talk, hey, I'm looking to do something 2 years, 3 years from now. Here's my current financial situation. Tell me what I need to do in order to be, successful, in order to get the best rate. How would somebody reach you?
Mm-hmm. Yep. You can either text or call me at 480-636-6762, or my email is matthew.scout@southeastmortgage.com.
And you'll offer the get ready guarantee, as I understand. So if somebody wants to spend 20, 30 minutes with you on the phone, max, do you think it could be less than 20 minutes? How long would it really take?
I think it'll be about 20 minutes
to
really be in depth and get the right message across and proper information.
Okay, 20 minutes, and then within 24 hours, you'll give them a written report that says, hey, here's where you are, here's the things that need to be done, and you should be able to do this, X, Y, Z. No, you can't quote them a rate at that time, but you should be able to get, if you do these things, the best rate or a middle rate or whatever it is. And I even pay off this credit card or get this proof or something like that. You can get that granular with it, right?
That's correct. Yes, I can.
Awesome. Get ready guarantee. Reach out to Matt Scout. And if you forget, then just go to gogaddisradio.com, click on contact us and say, connect me with the mortgage guru, and we'll be good to go. Okay. Everybody knows about homeowners insurance. It's the insurance you have to buy so that if your house burns down or something happens, the insurance company can help cover whatever losses you have. A lot of people have heard of title insurance, but they're not totally sure of what that is. But that's the insurance policy that insures a homeowner's interest in the title, meaning it says, hey, Cleve, we're going to give you some insurance to prove that you are the owner of that house. And if something happens, we're going to defend that. Now, there's a third insurance, and in many cases, people have no idea what it is, and it is mortgage insurance. Now, we only have about 3 minutes left in the segment. But first of all, what is mortgage insurance? Why do people have to have it? Who is it actually insuring, and how can they get rid of it?
Yep. So mortgage insurance essentially is an insurance policy for the lender.
Yep.
Making sure that if anything were to go wrong, that is a policy to protect the lender and the funds they gave for the loan. It's something that you pay each month. That's part of your mortgage payment.
So how is it determined whether or not, so I'm buying a house, let's say I'm buying one in Duluth, Swanee, and I'm putting 20% down. Will I need mortgage insurance?
If it's a conventional loan, and you're putting 20% down, you will not need mortgage insurance.
Okay, which must mean that if it's an FHA loan and I put 20% down, I will have to pay mortgage insurance. Or in that one, it's not called private mortgage insurance. It's called mortgage insurance premium, I think is what it is. MIP, it's called something different, but it's the same.
It's all the same.
Yeah. Okay. So 20% generally is the number for conventional loans. If you paid 15% down, you would have mortgage insurance. 10% down, mortgage insurance. 5% down, you would have mortgage insurance, right?
That's correct. Rule of thumb is 20% down would be the benchmark.
Yep.
Without costs being incurred somewhere else, whether it be higher closing costs or higher rate.
And so if I didn't want to pay the mortgage insurance myself, the lender could pay it, but the lender would give me an interest rate premium. So I would pay a higher interest rate so the lender would have the money to pay for it. So really, no matter how you look at it, you as the borrower, you are actually paying that. Now, it's my understanding that when you have 20% equity in a home, that you have the ability to get rid of mortgage insurance. Now, I know this does not pertain to FHA loans right now because that mortgage insurance runs for the life of the loan as I understand it. I'll bet you that'll be changing in the next couple of years because they got quite a surplus in that account now. But how does somebody get rid of the private mortgage insurance? And I'm sorry, we've only got about a minute left in the segment, so maybe we can get this covered before we run out of time.
Yeah, absolutely. So at 20%, you can call the lender to ask for them to review the file and see if they can remove mortgage insurance.
Yep.
Or if you get down to 22%, then automatically the mortgage insurance goes away by the lender without you asking.
Really? And so how are they determining whether or not you have 22% equity? Are they just looking at a value, or are they just figuring this is the value and now you're only at 78% of the original purchase price, so you must have 22% equity?
They're going off of the appraised value when you purchase the house. They're not necessarily checking the change in value during the market.
But a borrower, a buyer could actually, the homeowner could actually get an appraisal and after a certain amount of time submit that to the lender. Is that right?
That's correct. You can request it.
Matt, thank you as always for being here. I sincerely appreciate you. One more time, the phone number they can call you at?
480-636-6762.
Thank you so much for being with me. When we come back in our next segment, we have Lock Highland, the subdivision in Roswell. We're also going to talk about a $23 million order of restitution that was made against one of the largest landlords in Metro Atlanta. And a lot of people are ready to move but got nowhere to land. We'll talk about those subjects and more. Stick with us. We'll be back.